So what are your thoughts about Forex signals? You've probably seen them all around, especially in your early days as a trader. You probably did get lured in and baited in by the dream that these Forex signal guys promote online. They show the Lamborghinis, they show the lifestyle, and they show you how easy it will be. You just copy and paste their notifications, you sign up to their broker, and then you make thousands of dollars a month. And I think we've all at least considered it, and probably most of us at least fallen for that trap until you realize they want to give you crappy trades so that you lose your money, so that they get paid by the broker. And then people quickly realize Forex signals are a scam. And additionally, if you're a trader and you're looking to become a full-time funded trader, you're looking to take this as a professional career, why would you even be interested? As that saying goes, if you give a man a fish, he can eat for a day. If you teach a man how to fish, he can eat for the rest of his life. And therefore, the biggest problem I see with signals, even if they are real, is that they birth dependence on the signal provider. And the moment that person goes away, well, there goes your profitability also. So then why is it for the last 6 weeks, I have given every single one of my trades as public signals ahead of time with live updates, live commentary on when to break even, when to take a partial, when to take full profit. I've given the whole show publicly on Twitter. Why did I do that? The real goal was, I didn't see anybody do this. I've never seen somebody do every single trade for a whole month, or for me 6 weeks, and show the realities of a trader. And my real goals were to break some limiting beliefs, because when I saw on social media that people don't believe M1 can work, in my opinion, if you're trading without the M1 time frame, you're trading blind. It's like watching a movie in 360p and then watching that same movie in 4K Ultra HD. You're still watching the same movie, yes, but there's a vast difference between 360p and 4K. The same way I would say there's a vast difference between trading M15 or H1 and going down to the M1 time frame. It reveals so much detail, so much precision and accuracy that I think it's a must for every trader to master the M1 time frame, because it shows you the true intentions of the market. And a lot of people didn't believe in this, so I thought, let me show all of my trades for a month using the M1 time frame, giving live updates and showing exactly when a trade goes active and how to monitor it. I also wanted to break the limiting belief that people think trading high risk reward with a 3 pip stop loss, 5 pip stop loss, they just think it's not possible. So again, I thought, let me do that for a month and show people publicly. So I've already done a part 1 where I've gone through the first week or 2 of trades, and in this video I'm going to go ahead and continue for the last 6 weeks that I've been given public signals. And today, as the day of recording, after 6 weeks, was the first day I took a loss. Believe it or not, 22 public signals or public trades. Out of those 22, only one of them has been a loss. That was today. The rest have been either break even, take profit 1, or take profit 2. Take profit 2 being a 1 to 10 risk reward. It's been a phenomenal month. So let's break that down. So this is continuing on from the last video we did. So I'm basically updating and saying the stuff I talk about isn't a joke. This is not a probabilistic way to look at the market. It's the language of price action, the laws of price action. I always say this, go to first principles. It's not a case of putting a strategy on correlation based on probability. Learn the primary drivers, learn how the market really operates. And then you're not going on based on Elliott wave and blah, 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 smart money concept. You're going on true primary drivers, and then you're building confidence around that. Timing, daily cycle, lower time frame confirmations, displacements, manipulations, build-ups, inducements, all of these things are way more powerful than head and shoulder pattern, Fibonacci level, a trend line. These are all statistical zones, but they're not causation. They're not real strategies. So correlation versus causation. So 1 to 10 risk reward as forecasted, explained, and executed. So let's actually talk about this trade. So you can actually see that I'm talking about this position. So let's actually go back in time all the way. So you actually see in this video where I'm breaking down, once again, I'm in basically my office on the Palm. So let's go and actually look at that position. It's on EU, and I'm talking about this buy position I've taken on EU. It's reached my full target of 1 to 10. And I'm basically going on about the trick that I've shown so many examples. If you remember in the last video, I showed a bunch of examples. On Twitter, I've shown like 20 examples of this. So it's definitely something worth using. So we can see the correlation between EU and GU. So let's actually go to these days and actually see what price action was doing. So as you can see on my screen, we have on the M5 time frame, we have Euro USD. So I've already covered this position. That was a signal that I also gave. And we can basically see that we've come into a demand area. Why is it a demand area? Because this area that grabbed liquidity, it grabbed Asia low, okay, and it came to nowhere in reality. It didn't come to a level, but it led to a push out. It led to a higher high compared to the previous higher low, higher made. So we know that we're overall bullish. And then when price is coming back to this zone, this M15 zone, I know that all of this is liquidity. I can't really give preference to a particular area. All I can do is basically look at this whole area and say, where in there could there be a reaction where I have an imbalance here, for example? So it could be somewhere there. I know that this was the final manipulation before the push out. We drew equal highs. we had a mitigation, and then this is the one that finally led to the breakout. So I know that this imbalance here could be meaningful, but I mark out the M15 zone and I see how price is going to arrive after taking Asia low and during my London open, what exactly is going to happen. So as I've marked out that zone, I'm basically waiting for a reaction and bullish confirmation to come, and I align it with lower time frame confirmations and timing. That's what I'd really like to see. So I can see during my Frankfurt session, price is coming lower. Price then during my London open on the minute, bang on the minute, 8 a.m. UK time. So basically London open, spot on. What happens? We get a manipulation, which is right here. We get that inducement of that point, inducement into my demand, and then strong reaction, push out. So we're getting a bullish confirmation upon timing after tapping into a demand area. So I'm liking that with a small inducement. And then entry wise, I don't know exactly how to enter this because this is quite a reasonably large area. The whole move was a 10 pip bullish push. And then if I'm coming down to that imbalance is 1 pip, 2 pips is too small to take that. So M5, I'm kind of looking at the M5 zone, 5 pip stop loss. It's around that block here. So it's around this one. This is a rally based rally, but it's not a confirmation type I take. So then I have to kind of just go off M3, for example, and looking at that and say, okay, maybe it's off an M3 zone, but how did I actually take an entry on this area? Well, what I needed to do was, if we refer back to my Twitter, I showed it on Twitter. I'm saying the reason I'm taking this is because if we look at 8:17 a.m., which is right here, 8:17 a.m., let's put a line. What is price doing at 8:17 a.m.? 8:17 a.m. on Euro USD, the pair I'm trading, it's coming to that rally-based rally and it's respecting. It's doing a mitigation after a small build up here. It does an inducement down and respects this level. So that's promising, but it's not entry criteria enough. I can basically take the trade based on here and put it here. And that could be like a larger stop loss zone. But technically, there's all this imbalance that price can still come to. So why should I enter there? Well, let's give a quick comparison and look at GU. At the same time, what is GU doing? GU is at 8:17 a.m. What is that doing? On EU, we see what is it doing? It is doing respecting. At 8:17 a.m., it's respecting over here, respecting this whole base, the low. Over here, what is it doing? The low that was made here. So at the low that was made at 8 a.m. London Open, the low that was made at 8 a.m. London, EU is respecting, GU is manipulating it at 8:17. So we can do the comparison of 8:17 a.m. One respects, one does not. Okay, and that's exactly what I've posted on Twitter. I'm showing that on 8:17 a.m. one is respecting, one is not. Same demand area, same timing, everything. So that gives me an indication that this is a manipulation. Therefore, this is not manipulating, but it's going to be following the same trend. And therefore, that was the confirmation I could take on that trade. And then I break it down over here on Twitter in this video. You can go ahead and watch that in further detail. But that is that position. And then as we know, my break-even protocol, standardized, my TP1, standardized, TP2, full volume, standardized. So I know that a full TP, a 1 to 10 risk reward, remember, this is optimized for my data. I've done videos on explaining exactly why I take profit in the way I do. Go check those videos out. It's super important. I'm not taking profit based on my feeling, based on price action. I've optimized it for my data. Over 1,000 trade sample size, I know what's best decision for me. So I don't care about the 1 to 30 potential anymore. 1 to 10 is my absolute cap because that's optimal for me. On not a trade by trade basis, over 1,000 trades is the best decision for me. So what I've done is a partial win for me, 1 to 3 risk reward is 1.5% profit. A full target is 1 to 10 risk reward, 50% volume, that's 5%, plus my 1.5% locked in. So a total win for me is 1.5 plus 5 equals 6.5% for a total win, 1.5% for a partial win, break even, or minus 1%. Those are my metrics. So in this case, it was a 1 to 10 risk reward, therefore 6.5% banked. And I've mentioned over here, as always, 1 to 3 risk reward, 50% volume, 1 to 10 risk reward, 50% volume, 6.5% achieved intrasession. Look how quickly it was achieved. It was achieved basically in the space of, when was my 1 to 10 risk reward achieved? First of all, my target was Asia high liquidity. And you can actually see this is clearly a smart money trap. That's a smart money zone. Price comes to that smart money area. It's a higher high. It's Asia high. It's ready to be manipulated. But before the market manipulates them, it lures them in. It says, hey guys, you're right. This is a smart money zone. We're going to give you equal highs. We're going to take you to that previous smart money zone. We're going to give you a reaction. We're going to give you a break of structure. Let's get in that trade. Smart money traders are really excited here. And then we take them out. Okay, this is clear smart money traps. If you don't believe smart money concepts is retail, I've shown you so many examples of this. And the reality is this was the inducement. This was the real manipulation. When did it happen? Bang on New York Open. So these are not coincidences. Bang on London Open, the inducement that led to a push out. Bang on New York Open, a manipulation that took smart money traders out. I can't plan this. I've shown you dozens and dozens of examples. not only on YouTube, but on Twitter, everywhere. I'm trying to open your eyes to show you the truth of the market. Forget smart money concepts, forget all of these things you're seeing on the internet. Learn real primary drivers of how the market will move. If you're sticking to smart money concepts, you'll take a loss here. And what can you do about it? You followed the plan. You followed everything you were supposed to do. Loss. Anyway, how long did it take to hit a 1 to 10 risk reward? So let's actually look into that. 1 to 10 risk reward, which is my final TP, is over here. It happened at this point. It happened during London close, basically. So from London open to London close, that was exactly the trade duration. It's 8 a.m. to 4 p.m. So in the space of 8 hours, I got a 6.5% gain, and it was not very complicated. It was a very fast trade because you have a tight stop loss, you're playing session volatility, you're playing the daily cycle, you're playing market structure, you're playing all of these good things, and you're trading against the manipulations. The manipulations are traders trying to sell, traders trying to sell all over here. You do the opposite. You trade more intelligently. This is actually an interesting post. So Omar, I'm sure you've seen, he's one of the founders and owners of SFT, a brilliant prop firm. And he's someone I've known for many, many years. He actually came into my education as a student, and he always shows a lot of love on Twitter. And I almost feel bad because I say to him, look, your journey, Omar, your growth is not because of me. Yes, maybe I helped you in your early days and I showed you some things of how I'm trading, but you have now represented yourself as your own man, your own trader. You've gone on and done incredible things by yourself that other people that also had the same guidance from me didn't go ahead and do. You know, I can give people the same tools, the same input, the same knowledge. It then takes an individual to take that knowledge and go and excel. And Omar is one of those people who's taken multiple payouts, who's grown a huge brand, who's become a prop firm owner, profitable trader. So I no longer want to take credit. So Omar, stop giving me shout outs. It's like the 10th time. So yeah, this is just an update of that position on how far it went. So what I usually do is when it's a pro trend position, I do something different, which is I've told you the partial protocol system and it's fixed 1 to 10 maximum. But when it's a swing potential, when I see there's a lot more swing potential, what I'll do is I'll hold 10%. So 10% of my position size. So when it gets to that 1 to 10, I'm 90% of my lot size out. I'll leave 10% because it's pro trend. It might go a lot further. So this one in the space of 1 day became 1 to 15 risk reward. I'm holding 10% volume. So that becomes another 1.5%. That just holding it for swing. And if it comes back to break even, so be it. That's why I have a little parameter, a little drop of lot size to hold for a swing just in case. But I only do that for trades that I have a higher time frame potential, have a swing potential. I only do it for those positions. Pretty interesting to see as I'm recording this video and I'm going through the trades. It's a position that I'm in that I gave in Twitter is actually playing out now. And I can do a quick breakdown. It's live, literally live as I'm filming. And I gave this position on Twitter, so go ahead and reference it. It's from today, 20th of December, where we have this supply zone. This supply zone is following what? It's following order flow. We have that supply zone over here that is giving me the confirmation of order flow. And we're seeing that, okay, there was a minor inducement there, led to the break of structure, led to the lower low, complex pull back up, respecting that supply zone, going on and making a lower low over here. How does it do it? It does a run of liquidity over here, consecutive mitigation, break of structure, mitigation, build up, mitigation, 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 break of structure. So we have this whole liquidity pool after the low low is made. We have a smart money zone that smart money traders are going to be desperately trying to enter based on these highs. Price gives smart money traders that reaction. It does not sustain. This is where I took my first loss. After 6 weeks of giving public trades, 22 trades, my first loss was over here. I did enter upon the zone, but then we get a sharp inducement and sharp price action, taking out that supply level. So now we see that inducement and then see how volatile that reaction is. Strong break of structure, strong reaction, coming back for the mitigation, entry, and then lower low. 1 to 3 risk reward, taking my 50% partial, and now we are getting closer towards my final target, which is to make a low low. But anyhow, let's get into this position of 29th. So another thing to mention is check the timestamps. Everything is live. You see that there's a green dot at the top of the screen on GBP USD. That is showing you it's a live chart. It's a live market, and I'm not manipulating anything. You can see the time I post the tweets. You can see everything is tracked live. I can't manipulate posts, okay? And you can see I'm basically forecasting. I'm saying that this zone in the red box, I'm looking to sell here. I need lower time frame confirmations and I need time. I'm not just putting a limit. I'm giving the conditions I need. If we come onto my laptop, I'm showing why. I'm showing that I like this inducement that's happened. I'm liking this build up. And then I'm liking another inducement here that's led to breaks of structure. I'm seeing bearish intent and I'm seeing a pool of liquidity waiting. So I know that I've reached premium levels. I'm seeing signs of inducements. I'm seeing bearish signs over here. So I want to come back into this red box and look to sell to target that liquidity. That's all I want to do. I want to target that liquidity and I want to do it in a correct time window and I want to use lower time frame confirmations. Now we go into the thread and we say, I like your market narrative. Shout out Khalid. He's a good guy. I met him a few times in Dubai, building one of the best prop firms, it looks like. Fastest growing prop firm, it looks like, with funding pips. So this is me basically replying to him, say, hey man, I got it in the end. My analysis was correct. Let's actually talk about that position. So I started the day giving that analysis, and then I'm happy to take a shot here. So I'm saying it. I'm giving it live now. I'm happy to take a shot here. Nice supply zone, nice liquidity pool to target, nice low time frame with 2 leg of supply. Timing is good. So the 2 conditions I said, low time frame confirmations and timing, these 2 were met. So then I updated Twitter and I said, look, these are the reasons. My gray box is my time window, my New York window. And not only that, I'm seeing an entry type of mine. So I have the gray box confirmation, and then I also have a 2 leg protocol, one of my entry models like this. That's one of my entry models without a break of structure, because there's no break of structure here. You cannot take this trade. A lot of people take that trade. That is invalid. You can't take that trade. But on the second leg, you can. So I did validate that and say, okay, I've got 2 legs. I'm giving a screenshot. You can see the green dot is showing its live price action. Entry is active, and I'm showing my sell position is right at the entry. It's right there. It's not even in profit yet. And I'm tweeting about it. And I'm saying, I'm happy to take a shot here. It makes sense to me. Risk reward potential is there. Confirmations are there. Daily cycle variant is there. And then also risk management is there. And then in the end, it does go ahead and play out for my full target 1 to 10. So it's a public 1 to 10 risk reward once again. And how long did it take to play out? We can actually do this full breakdown because I have it here. That whole trade of 47 pips, 1 to 10 risk reward happened in the space of 5, 10, 15, 20 minutes. 20 minutes, it reached my final target, which is a 1 to 10 risk reward. Within 20 minutes, it's reached a 1 to 10. Tell me that's not powerful. Tell me that is not intra-session mastery, understanding the daily cycle, doing it live ahead of time, publicly, back to back, day to day to day. It's not a cherry-picked hindsight, one-off scenario. It's daily repetition, showing you daily cycle variations, true market intentions. And it's cool to see that so many other people were catching it with me. But let's go ahead and break it down a little bit further. So I say, I love this, 1 to 10, check. When you know how to trade, you can read the language of price action, laws of the market, call the trade idea in London session, tracked it live during New York session, no hindsight, just live updates, reputation on the line every day. So let's break it down, exactly the entry. So it's played out and it's gone exactly to the target of these lows that I marked out. I said I wanted to target those lows that I mentioned in my London session. I said I want to liquidate that area. Just scroll back a little bit. That's exactly what I'm saying. I want to take that lows. I want to target that liquidity pool. When I'm doing my analysis, I'm basically keeping it there. Those are the lows I'm targeting. And then I go on to the updates. Those lows have been matched. They've been met. So let's talk about how I got that entry. Let's come into the M1 time frame. So I had my red box of where I'm looking to prefer to take a trade. And I basically have 2 main areas. I have the extreme POI. Why is that extreme POI relevant for me? Because it did a mitigation there after what? After it did liquidity engineered, and then also a build up inducement. So I'm liking these things. It's an inducement that led to a low. Okay. Then we've engineered more liquidity. We've engineered Asia low liquidity. So we have liquidity engineered there. We have liquidity engineered here. So price is doing what it always does. It goes from liquidity pool to liquidity pool. Constant build-ups, inducements, lower low, build-up of liquidity, comes back, does a minor inducement here, as you can see, and that area leads to a low low. So once again, we're following the inducements, and those inducements are telling me that the bears are in control. Inducement there, and liquidity engineered once again. Once that is targeted, what is left? So we've taken first liquidity that was engineered, that trend line was taken by that move. Then this inducement took these equal lows. And then this inducement that's coming back is going to take that low, which was my target from London session. So we can see it's the laws of the market. Price manipulates, builds up liquidity, engineers liquidity pools, builds up liquidity, induces people out, respects an area, and then goes to target the next pool. It's from zone to zone to zone with time correlations. That's a daily cycle. It's so powerful. And again, if we look at it again, what are we seeing? This lows got extended. It got extended. How did it get extended? Price started to do the low of the day, started to do the complex pullback, traveling up. When it gets to that area, meets it, it even gives a strong reaction down, and then leaves liquidity. It's engineered all of this liquidity. So people are happy. Now people are going to be entering this area prematurely. These smart money traders are getting in. They're waiting for their confirmations. And I took a 2-leg protocol here. So when I saw that 2-leg protocol, it was worth a shot. It was a valid entry for me. And then price did an inducement out. So we need to see how that was managed. So we see 1 leg, 2 leg. Price enters. We take an entry based on that zone. Stop loss over here, for example. And then price does come out and does a strong inducement out. So it does that manipulation. So I know that this smart money zone led to a smart money trap. We even got the seller's reaction right here, drawing them in. What is really going on? We built up liquidity. We did an inducement. We push out. We do a mitigation. We induce. Okay, we take out these smart money traders. We take them all out. And now where is price action? Price action is here upon an inducement candle, which is what we prefer. Build up, inducement, lower low. So we know that we're in a better zone. When we get to that better zone, are we still in our time window? We are in our time window. Have we seen a manipulation? Yes, we have. We've seen a strong inducement of smart money traders too. So this is a valid entry with a 3.7 pip stop loss. We put a limit there. and we can execute on that position. Break even point being over here. When price makes a lower low, we break even. 1 to 3 target is right before we break even. So that's actually good. So we can take partials. We can be risk free because we've taken a partial before we actually physically break even. And then 1 to 10 being the final target. And then we come back to Twitter, and that's exactly what I'm showing. I'm saying that, okay, trading as I tweet real time, but this is the update. Smart money trap. I took a shot there because it was justified. The 2-leg protocol, I took a shot there. It was justified. I took the loss. That was okay. We have risk management for that. But then we grabbed liquidity and came to a better zone and timing. So let's see how this one goes. So I'm again showing that live. Again, I'm tweeting as I go along. So it's hard for me to update because look how strong that reaction was. So by the time I type it out and take the screenshots, execute my position, okay, price moved a little bit, but that's within the space of entry 1 minute. 1 minute later, we've already reacted. So I'm literally updating this 2 minutes after I've entered. I'm typing as quickly as I can. I'm doing my risk management, taking my position. And then by the time I've taken my screenshots for Twitter, price is already coming down. But it's live updates, as good as I can get. I can't get faster than that. So I explained that in this tweet. Let's see how this goes. It's a fast break even. And in fact, the 1 to 3 risk reward came quickly. And then the full target 20 minutes later, basically, that is reached that target that I mentioned during my beginning tweet. The beginning tweet, I said, I want that liquidity pool to be taken. That liquidity pool at the bottom, that's where I want price to go. And then by the end of the day, you could see price has gone to that liquidity pool exactly. I've traded it and I've taken my partials along the way. And that's exactly that day. Perfect. All was well at the end. Took a loss, which was valid. So minus 1%, it's a valid loss. I'm supposed to be happy if I took a valid loss. I'm not supposed to be annoyed because it's part of my system. I know I have a 50% win rate. I know certain trade models will have losers in it. So I know that I'm supposed to take the losses. And if I start to readjust my plan, get annoyed for losses that are factored in my data, that I've literally plotted in my journal, that I've literally plotted in my trade plan, I know there's going to be losses. I don't need to do anything. This is the plan. This happens. It's factored in, planned for, risk management is there. I took a valid loss and then still a valid opportunity presented in the time window with the manipulation, the lower time frame models I use. So I took another entry, which was just a little bit after the first loss, and that's the one that played out. So let's say I didn't take that trade. Let's say I got cold feet, I got emotional, I didn't follow my plan. I'm 6.5 R up because I've taken a 1 to 10 with my partial volume system. I've taken 6.5% profit, minus 1% loss. So I'm good for the day. I'm 5.5% up. But if I got emotional and I didn't take that second trade because I got in my head about losing trades, whatever, I would have just held the loss and not taken the win and just been in a losing position. That's why I always say, follow your plan. But if you don't have a plan, that's where you begin. Make a plan. Once you have the plan, stick to it because your data covers you. You know you're going to be all right. You just got to keep executing on the plan. And we don't know how our losses and wins are going to come. Maybe our losses are going to be back to back. And then the winners will come. Maybe it'll be win, loss, loss, win. We don't know how they're going to come about, but we know if we follow our plan, it will be good. So don't let your emotions get the better of you. And this is a tweet that I made that I'm very passionate about. I don't know where I get these thoughts from, but I said, if a treatment isn't working, question the diagnosis. That was something I was taught in dental school. If your treatment plan isn't working, maybe you got the wrong diagnosis, wrong plan, wrong treatment plan. So how do I apply this dental wisdom into trading? So the problem or the disease that people have is I'm not profitable. So what do? They do a diagnosis and they say, I need more education. My treatment plan is I need more education. That's a wrong diagnosis. Let's talk about it. After you've studied 2 or 3 reputable courses or ICT or something, you have sufficient knowledge. Your losses don't come from lacking knowledge. 99% of courses are the same. You don't need to buy another one. Instead, address market experience, market application, market IQ, and psychology. That's the correct treatment for your diagnosis of not being profitable. The best way to treat that, my advice, is study and watch price action of EU every single day. London session and New York session, do that for a year. Watch the markets every day for a year with the knowledge you already have and learn how to apply it correctly. Watch and learn prices behavior, the law of the market, and how those tendencies play out. You don't need another course. You don't need another mentor. You just need to learn price. There's no substitute for those reps. Just sit, watch, and learn. That's where the real growth comes. So I think that's a nice way to wrap up this video. I have, of course, a lot more trades to go through and just in general breakdowns or whatever. So we'll go through all of these things. My trip to the Maldives, meeting Mr. Tate, we had dinner with him and a lot of cool things. So yeah, we'll get into all of that in the next episode of the Twitter reviews. But hopefully you learned some things from the case studies and also just seeing live trading and breaking those limiting beliefs. So ladies and gents, thank you very much for joining in today. I just want to say that if you are interested in working with me closely, not buying another course, not just buying more education, but actually learning how to apply things things correctly, learning with market IQ, market experience, and actually seeing someone trade day in, day out, and actually going through the realities of the market. There's a link somewhere where you can have a growth planning session with my team. Just fill out the form, and then if you do get selected, you go ahead and speak to my team. I don't want to have 1,000 members. I don't want to have 1,000 students. It's draining, and Discord with 1,000 people is so ineffective. I want to work with the best people. I want to work with high quality, hardworking people. So if that sounds like it could be you, go ahead and fill out the application form, speak to my team, and maybe see you on a more intimate and close environment where we'll go through your journal, go through your trading, and see how we can directly help you. But yeah, ladies and gentlemen, thank you very much for tuning in, and I will catch you in the next one.